with your trades the week ahead. It's been a truncated week, and next one as well is going to be one, with Tuesday being a market holiday. But this week, it only flattered to deceive. Just when you all get up to celebrate 9,000, the market went sub 8,900 on Friday.
Yeah, I mean, the 3 or 4 or 5 fat ladies were ready to dance, and somehow they didn't get a chance to do that. Hopefully, it corrects itself next week. But yeah, there's a question mark on the leadership now, right? I mean, IT is under a bit of a cloud. Motown has done what it could. Banks now starting to just look a bit shaky. So you don't know that even if you were to hit 9,000 and go beyond, or 9,100 and go beyond, what will take it?
Yeah, big question mark on that, which we will try and analyze and probe in the due course of this show. But let's just walk you through what the week went by was looking like. 4 trading sessions, but the Nifty managed to put on a good show. Had it not been for the slight bit of weakness which trickled by on Thursday and Friday, we could have done much better. So a sub 8,900 tick, and uptick of nearly about 1%, and 1% for the Sensex as well, which saw levels of 29,000 plus on a closing basis as well. Better a show when it came for the broader markets, with small caps taking the lead in excess of about almost 1.5%. First, the losers, considering they were largely the newsmakers this week as well. Yes Bank, and that had to defer that mega ginormous $1 billion QIB. So an 8% correction coming in for Yes Bank alone, and this is just on Thursday and Friday alone. And TCS then, after it talked about a fatigue in its BFSI segment, 6.5% downtick coming in there. And then of course the leaders from the rally of late, cement saw some profit taking, with Ultratech knocking down about 3.25%. The other losers, of course, were some of the other rub-offs from the TCS warning. So Tech Mahindra as well fell in trade. But the gainers, BHEL, and what a stupendous show after its earnings, 13.25% uptick. Ditto was the case for an ONGC. Metals came back to the fore this week. Tata Steel was a gainer of about almost 5.5%, and banks and autos did phenomenally well. So ICICI Bank, Maruti, Tata Motors, these were all other big winners. But Neeraj, amazing strength in the broader markets.
Yeah, a lot of stocks active. I mean, you know, the expensive stocks and even the other ones went up in trade. So Bajaj Finance, Bajaj Finserv, I mean, sure, didn't set the stage on fire, but did clock in new highs in this week. 3.5% for Bajaj Finance. I think on the back of IPOs coming in the space, Bajaj Finserv intra-week hit new highs as well for itself. A lot of other stocks buzzing. I mean, you know, Bombay Dyeing, for example, I think a big move that is coming out there. I don't know whether, again, talks of a sister concern IPO or some real estate issues getting settled, but Bombay Dyeing was up and active. Patel Engineering has been on an unabated move, 71% this week. I think it's been a fabulous move. FDC, a small cap or a mid cap pharma name, but I think had a good week, 15 or 16% higher in this week gone by. The Rakesh Jhunjhunwala family is up stake in Aptech, and I think that up move continues on that one, 34%. There's been a big wealth creator. A couple of disappointments included an Inox Wind, which kind of cracked 6.5–7% after a very disappointing quarter. But you know, results galore. Venky's out of the blue came out with a fabulous set of numbers. The PAT has trebled for Venky's India, and that stock has clocked in 24%. We'll talk about all of this with the 2 gentlemen, Mayuresh Joshi, Fund Manager, Angel Broking, on the fundamentals, Shrikant Chauhan, Senior VP, on the technical. They'll be joining us on the show as well. Good afternoon, both of you. Shrikant, just a very quick view here. The index just showed a bit of a chink in Friday's session. What are the levels you are working with for next week?
Well, for Nifty, our call is that it is into still strong hands, because the way we have seen spectacular rally from the bottom of 8,500 to almost 8,900, 8,970 on the high side in just 7 trading sessions. So one thing is very clear, that in case if there is any fall, again the buying should emerge. And those levels we are expecting somewhere close to 8,800. So around 8,800 levels, 8,820 levels there, the market is having very good support, and from there again we are expecting a rebound. So till the market is above these levels, I think we are going to see 9,000 in the near term.
Okay, that's the call on the index, but this week was about some of the nifty newsmakers. And let's first talk about the good news. BHEL, what a strong reaction coming into its first quarter numbers. The PAT has come in higher by a good 54.5%. The sales as well showed a phenomenal uptake, and so did the EBITDA margins expand. They jumped finally into the black, 1.3% versus negative 5.7% margins. While of course the operational numbers have looked very good, it's the order book visibility money, which continues to be a bit of a question mark, which is why you had a bit of a mixed bag when it came to brokerages on BHEL. So while some of them remain neutral, some of them upped their EPS forecast as well for BHEL. Mayuresh, hi, what is your sense on how investors should look at BHEL right now? And because clearly it seems like there are still some grey clouds on what the order book pipeline is looking like.
Afternoon, Mayuresh. Oh yes, clearly. Again, I think the numbers were quite good this time round, but whether this consistency will get maintained over the next few quarters is something to be seen. As you're rightly pointing out, I think the order book around 1,08,000 odd crores, and again, out of that, I think 35-40% of the orders are slow moving. So again, I think if the execution is not up to the mark over the next few quarters, you will have execution issues, and that will probably reflect onto their bottom line. Thirdly, I think the kind of retention money that is depleting, the cash that is depleting, I think that is not giving an encouraging sign. And again, I think the JDU contracts that they execute, that will also have an escalation in raw material costs, which can pull down margins. So I think the consistency in numbers is something to be watched out for. So unless that starts coming through, I think a re-rating on the stock probably is not warranted at this point of time. The stock might probably consolidate with the assumption that the numbers might probably improve going forward.
Okay, the other big newsmaker, of course, was the largest company, not just the largest IT company, the largest company by market cap, and that is TCS. Cracked 6.5% after an earnings warning that came in from TCS. Now, the only question is whether this will be limited to Q2 or whether this can go ahead and, create a problem for the whole year estimates, and whether this leads to some bit of PE rating for the space at large or no. I think the question marks that people would have is whether or not this would mean that the IT company's visibility for the year as a whole is under severe question mark, and if that is the case, why go out and bet on these companies? Rather look out for growth, because a lot of domestic oriented companies are looking good. Now that's the trade-off that could come in for companies such as TCS or the space at large. Mayuresh, come in. TCS clearly will have a problem in Q2. There are a couple of other companies like Mindtree which have also stated this. What is the top idea in the IT space right now, if you have one? Are you avoiding IT completely, or are you selectively choosing an IT stock?
Now again, largely Neeraj, I think once you've seen all these profit warnings come through from companies like Cognizant, Mindtree, there was a cancellation of the RBS contract for Infosys. TCS is probably guided for some weakness in the BFSI segment. So this is clearly pointing to that Q1 was probably a little bit on the softer side because of wage hikes and visa costs. Q3, Q4 are traditionally weak quarters, and that is when the impact of Brexit will also start getting known to the markets. So the large unknown factor of the Brexit fear will start playing out. So the IT companies to deliver in Q2, and with kind of profit warnings that we've seen, the kind of growth that one really expected both in dollar and constant currency terms probably comes under a cloud. What you're also seeing from TCS is that BFSI almost contributes 40% of the revenues. You're probably looking at US as a geography contributing 53.5% of their top line, followed by UK at 15 and Europe at 11. So I think if there is discretionary spending contraction happening on these geographies, and specifically on BFSI, that will have a telling effect in terms of how the EBIT margins will pan out. The management had given a guidance of 26 to 28%, and that itself can come under pressure, which will put the EPS estimates of around 150 rupees under pressure, and the dollar growth under pressure, which was expected anywhere between 11 and 12%. So again, I think the large underperformance might continue going forward. The best way of playing IT stocks is to probably wait out for Q2 results, see what the managements have to say over the next few quarters and the pipeline thereof in terms of customer and order books, and then probably take a call. So my call is that the IT sector will underperform, wait for Q2 results, and then probably take a call on the sector as a whole.
Right. Well, the other newsmaker this week, and indeed the biggest loser, was Yes Bank. Quite a fiasco when it announced that ginormous $1 billion QIP, and that didn't quite get off the table. Sources are indicating that the QIP was priced too high, there was low demand, the stock was below its lower band of QIP as well. That's the kind of crash that you saw in the stock price. Now, what the management has to say is that the merchant bankers advised to defer the QIP issue. They were caught on the wrong foot because of the market volatility. And yes, they also talk about, SEBI's QIP guidelines creating a lot of confusion as well. They've talked about the fact that they will certainly raise the QIP within FY17 as well. So it's not indefinitely deferred. It's going to happen this fiscal year itself. And just want to get your views on this one, Shrikant, because clearly the kind of outperformance in the stock, it doesn't seem like the shorts are still quite out of the system with the weakness on Thursday or Friday. Or do you think this makes for a case of a bounce on Monday?
I think while looking at its overall formation of Yes Bank from 590, it went to the levels of 1390, 1400 without any major correction or without any meaningful correction in this particular run-up. I think whatever the correction is there is just a reaction to its smart run-up of last 1 year, and this is the most outperforming stock from the mid-cap space. So I am of the view that technically it is correcting as per the requirement, and it is now very close to its support area of 1250, 1245. If there is a medium to long-term view, then certainly one should look for adding this particular stock to the portfolio, because whatever the correction, and this type of steep correction is always welcome for investors, those who have especially missed the boat. So I think around these levels we should look for adding this long positions in Yes Bank, and again we can keep a target of some 1700 to 1800 on the higher side. Yes, there is a phenomenon, there is like the trade that a lot of big players, they want to they are looking for the opportunities to reduce their exposure from private banks, and they want to shift into PSU banks. But the way the stock has performed, Yes Bank has performed in last 1 year, I am of the view that from here also we are going to see a good amount of return in next couple of months.
Okay, let's talk about the mid-cap end of the market. There were a clutch of movers, and Avan Johnson to talk about the top movers or top news makers in the mid-cap space. Avan.
Well, lots of movers and shakers this week. Jubilant Foodworks was thrashed out of shape on account of an abysmal Q1 numbers, particularly the same-store sales growth, which came in at a negative 3.2% versus analyst expectations of 4% plus. In fact, the management attributed this to the weak and the subdued consumer sentiment. Deutsche Bank has maintained a hold with a target of 1350, saying that the consumer behavior may impair the medium-term growth outlook, and although we could see a turnaround in the second quarter according to the management. Meantime, Mindtree management acknowledged that the Q2 revenue and margins may be lower than Q1. They said that the savings from initiatives won't offset the Q2 revenue slowdown, and that uncertainties in their bluefin operations could also continue. Credit Suisse downgraded it to underperform, slashing the target to 500 and cutting the earnings estimates by 8 to 14%. And then there was Aptech that was in focus on account of fund action. Rajesh Jhunjhunwala bought about 2.5 lakh shares at 142.7 during the week, and Rakesh Jhunjhunwala and family raised the stake. Rekha Jhunjhunwala bought about 5.1 lakh shares at 155, and Rakesh Jhunjhunwala and PAC acquired about 16 lakh shares during August 9th to the 7th of September, taking the total share to 49.3%.
Okay, that's the word coming in at some of the big movers in trade. Mayuresh, anything that has caught your fancy when it comes to the big movers from the mid-cap arena, be it the likes of an Aptech, a Jubilant Foods, or for that matter, the warning set out by Mindtree?
No, again, Aisha, I think I really don't understand what's really changed fundamentally with Aptech. The EBITDA margins, the profitability, in fact, is being seen on a downtrend, and I think it is going to take a while for those dynamics to change. Even within the peer group itself, if you look at even NIIT, I think they're still struggling on the EBITDA front, whether they look at the corporate learning solutions or the skills and career group as well. So again, I think it will take time, so I don't see any fundamental changes happening on that. But Jubilant clearly disappointed on the SSG front, and it is going to take some time for them to recover, both on the operating front as well as on the bottom line. Mindtree, again, as we discussed IT earlier, I think the kind of warning that has probably come through, you're expected to see softness in numbers come through, and the recovery probably taking longer than one really expects. So I'll be a little bit cautious on these stocks at this point of time.
Okay, let's take a very quick break then on that note. And as we do that, let's hear it out from Ajay Piramal of Piramal Enterprises, who rarely goes wrong with his investments. He's one of the veterans of the markets, and here's what he had to say in an exclusive chat with Neeraj.
As when we look at a business, we are not that concerned about short-term valuation. So let me put that. So, but I think that there is a significant growth possible in financial services. And why is that growth? As you know that if the economy is growing, financial services normally grows 2.5 times of that, and that means that if the economy grows at 8%, 20% is the average growth of a financial services entity. The average means all the banks, NBFCs together. You can see that about 75% of the lending today is still done by public sector in the country. A lot of these have got issues of NPAs, there are issues of management that need to be sorted out, which means that it's the private sector, and that also they have a few other banks in the private sector itself who are saddled with NPAs. That is just this private sector and the NBFC which will have the growth. And therefore, can you expect higher growth rates? I think so. For some time, we see that this will continue to take place.
You reckon for your book, consolidated, we'll dissect it as well, but consolidated, you reckon 20-25% as a conservative estimate for the next 5 years is a distinct possibility? Or probably more? Am I underestimating?
I think it will be higher.
It'll be higher.
Because the way we have seen growth in the current year, I expect it to be significantly higher than that.
Alright, back to your trades the week ahead right here on ET Now. Now remember, something that will keep all the insurance related companies active is a big IPO that is coming out sometime in the next 10 days. Poonam gets you the details of this IPO. Remember, we broke this story exclusively at least 4 or 5 days ago. Poonam.
That's right, Neeraj. In fact, if you look at the entire details of the final IPO details itself, ICICI Bank does mention that they are in fact likely to raise from the ICICI Prudential Life Insurance, they're likely to raise 5,400 to 6,000 crore itself. That is the IPO size for the life insurance IPO of ICICI Bank. In fact, with this, the price band itself is anywhere between 300 to 334 rupees per share. In fact, the total offer size itself is at nearly around 18.13 crore equity shares. And if you look at the entire valuation itself, the valuation, if you do a back of the envelope calculation, because with this ICICI Bank in fact would be selling nearly 12.63% in terms of their stake in the entire IPO. So hence the entire IPO itself would be valued anywhere between 43,000 crore to nearly 48,000 crore, and this is pretty much the similar numbers that we were discussing right on Thursday itself. In fact, with the life insurance IPO, it's been valued at nearly around 3.1 to 3.4x price to embedded value, with the embedded value of the life insurance business itself being close to 13,900 crore. If you look at the recent deal itself, the Max HDFC deal, even with that deal comparison, that deal happened close to around 3 to 3.5x price to EV, and we are seeing similar valuations coming in there. So pretty much very neat valuations for this entire IPO.
Okay, Poonam, thanks much for those details. That's going to be, of course, ICICI Pru, which is going to take center stage come next week. But let's also talk about some of the wealth creation strategies and some technical strategies that you could bet big on come Monday morning. And Mayuresh, some stocks that you would like to share with our viewers?
Navkar Corporation, in my opinion, has corrected significantly, and if it corrects further, it gives a good opportunity for long-term investors. We've recently commissioned an ICD in Vapi. Now, Vapi accounts for almost 27% of the overall business in JNPT, and the current imports have to go through a regime of customs clearance at CFS and then have the road transportation done. With the ICD, I think a lot of import hassles get probably resolved, and even on the export front, because of the rail connectivity that they've got, 40% of total exports that hit JNPT probably go directly through the road. With the ICD in place, we're expecting around 170,000 TEUs as a potential market size that Navkar can probably look at. The second is the expansion probably in Somthane, and that probably will also hit the South Gujarat traffic volume, which can later get diverted to Vapi as well going ahead. And third, the logistics park in Vapi itself will ensure 32% top line and bottom line growth for perform over the next couple of years. A couple of risk factors probably with the foreign currency rate of 194 crores and delay in capacity expansion in GLPD can probably be emerging as risks, but largely I think expecting EBITDA margins to stay stable at 43-44% and the company to report an EPS of anywhere between 11.2 to 11.5 rupees and 16 times. My own sense is very reasonable. So any corrections onto the stocks can be taken as a long-term opportunity by investors.
Okay, and before we get to the technical ideas, Yatin joins in to give us a quick dealing room check. Stocks that dealing rooms are watching out for next week. Yatin.
Couple of interesting stocks to watch out for next week, and starting with Sun Pharma. They will have the AGM later this month, and ahead of the AGM and the buzz of some corporate announcement along with the AGM, dealers are recommending buying Sun Pharma at current levels. So the accumulation is beginning in Sun Pharma and is expected to see some momentum next week. ONGC, and that stock saw some good momentum coming in after reporting good set of first quarter earnings, and on the back of domestic fund buying, dealers are expecting good trading upside in ONGC. And watch out for Century Textiles, and that stock is up 8 days in a row, and clearly the momentum has begun after we had the AGM in which the management announced the value unlocking in the real estate division, wherein they will be looking to monetize the land bank and forming joint ventures. So clearly on the back of that real estate unlocking, we are seeing some good accumulation which is happening in Century Textiles. Dealers are expecting a 5 to 7% trading upside here as well.
Okay, Yatin, thanks much. That's a slice of what the dealing room chatter is to bet big on Monday morning. Srikanth, what's on your trading list?
Aisha, I think in last 2 days we have seen good amount of volume as well as price-based reversal in sugar as well as real estate stocks, and we have chosen those these two sectors to take some weekly positional calls. The first one which we have chosen is Dhampur Sugar, which is currently trading at 110, 115 levels. There we have a target of 135, and currently it is available at its very good support area. So with a stop loss at 100, we can take long position in Dhampur Sugar at current levels. The other stock which we like is Indiabulls Real Estate, and here also you can see that HDIL, DLF and Indiabulls Real Estate all are corrected to their major levels. They are reversing back. In fact, DLF did well, HDIL did well, and we are of the view that Indiabulls Real Estate, which has started its run up from the levels of 50 to almost 100, I think now the stock is again ready to cross its previous highest levels of 100, 110 in the near term. So here also we can take long positions with a final stop loss at 81, 82 on the downside.
Alright, Srikanth as well as Mayuresh, thank you so much, gentlemen, for joining us this week. Have a good weekend, of course, and from the viewers, from Aisha and me and the team that put this show together, thanks so much for watching. We'll see you with the live markets come Monday morning.